Trading Path Chat covering crude oil and metals. This is Bob Iacchino along with Mike Arnold from Path Trading Partners. Quickly, before I give the screens over to Mike to show you what's going on the charts, the EIA, Energy Information Administration of the U.S., released their crude stockpiles number and their crude production numbers, and the stocks rose again yesterday. Not as much as expected. Crude inventories rose by 1.5 million barrels. Analysts are expecting 3.1, but prices still edged lower, as you can see on the chart that's on your screen right now. A lot of that had to do with the fact that production rose again. 9.03 million barrels per day in the U.S. for the week of February 24th. That is a rise of 30,000 barrels, little under 30,000 barrels. And again, last week was the first time U.S. crude production had been above 9 million barrels a day since about 2015, early 2015. Crude stocks rose to another record, 520.2 million barrels. And while gasoline demand is expected to pick up, the gasoline stockpiles are also at record highs, and it would take 2.5 years at current gasoline demand levels to work through those stockpiles. So they need a really strong summer driving season or some more actions from OPEC to boost these prices. We've talked about it a lot. Crude oil has record longs, most longs on record in terms of speculators. And if those start to work their way out of the market, you're going to see high volume sell-offs, and those kind of sell-offs tend to stick. Copper, quickly. Freeport-McMoRan told employees in a memo that there's no returning to business as usual at its Grasberg mine. Freeport is on an export ban, and they need licenses from the government of Indonesia, and they don't see any improvement in that in order to export the copper that they pull out of that Grasberg mine in Indonesia. And in terms of Chile, there was violence at the Escondida mine. The Escondida mine is the largest copper mine in Chile. Chile is the largest copper producing country in the world. They've been on strike for coming up on 3 weeks now, and there was some violent. There were striking workers that blocked several access roads. There was confrontations with police. So that doesn't look like it's getting any better, and copper rebounded. Gold is just reacting to the strength in the dollar. Probability of a rate hike has moved from 66.5 yesterday to 77% today. To be exact, it's 77.5% that they will hike rates in March. And Nomura moved their rate call from 2 rate hikes to 3 last night. Nomura is now calling for rate hikes in March, September, and December. So the dollar is strengthening, gold is falling. Let me turn it over to Mike to show you what the charts are telling him.
Thank you very much, Bob. So here we have crude up there. Crude within this big congestion pattern, which we've been in since back in mid-December. We're at a pretty critical junction here. We've tested the 52.65 key GAN level, which is a support pullback zone for possible rotation higher, and we're at the flat 50 EMA. If we get a move below this, then I'm looking for the 52.17 and then the 51.70-69 mark, which are another GAN levels and end of a clear path move, especially if we do get a close below this on a daily basis. And I'm watching for a retest of these lower areas in the bottom of this horizontal channel. If this level holds and we rally back, I'm looking for a retest of the 53.13 to 53.18, which is a key defining point on the trend line. And then about the 53.50 level, which would be kiss the trend line goodbye, and where the moving averages are converging to form a pushing lower rotation zone. Those are my levels in crude. In copper, as Bob mentioned, with all that mining information, we rallied up. We actually went through the static GAN rotation zone, but have pulled back down below it. So that level is held on a closing basis. So those key levels, especially about the 275, are key. Watch for that. If we can get back above that, then I'm looking for another retest of some of these higher prices around 278 to 280. Pulling back now, we are watching for the next test lower of the 268, then the 265 levels. We also have a rising trend line coming in right around there. So watch in the middle between those things, maybe about 267. Gold is also at a very critical junction. We're at the rising 21 exponential, which is our rising rotation zone, and this trend line. They virtually come in on top of each other. So that's these key levels pretty much have to hold. Otherwise, I'm looking for lower prices. If we do break and close below that on a daily basis, next key areas, 1229 to 1231, we have dueling GAN levels there. And then if we break down, it could be a retest of this prior breakout zone in the rising 50, which is right around 1220 to 1217. Should these levels hold and move back higher, we have a significant level and a prior GAN level right about 1246 to 1247. Then we have a declining trend line coming in, and we'll be looking right around the 1254, 1255 mark. Finally, what's interesting in silver, silver has not pulled back much at all. We're still above the rising rotation zone. We've got this pretty nice consolidation in this 100% measured move pattern, declining trend line, which has been tested multiple times, and a rising trend line coming in with the 8. If we do get a close below this trend line, watch for retests about the $18.09 to $18 mark. If we hold above here, we'll stay in consolidation as long as we remain below this trend line. If we do get above that trend line, especially on a closing basis, watch for about the 1860 levels, and then we rise into this big area of prior topping tails and everything else with an eventual target of about 1899. Those are our key levels in silver, copper, gold, and crude. Back to you, Bob.
Thank you, Michael. If you find these videos interesting, please click the like button. Feel free to comment below. Also subscribe, and when that little bell icon pops up after you hit the subscribe button, click that bell as well. That will make sure that YouTube alerts you when we release a video. They'll send you an email. And it's kind of important because these are time sensitive. Follow us on Twitter, path_trading. Like our Facebook page, which is pathtradingpartners.com. And we would love it if you would listen to and subscribe and review our podcast, the Money Path Podcast. You can find it by typing the Money Path Podcast into your iTunes search bar or your Google Play search bar, or you can find it at our website, pathtradingpartners.com. Also, if you want to reach out directly to us, you can send us an email at support@pathtradingpartners.com. Cheers, everyone. Thanks for watching.